Good morning, retail traders. Today I want to talk about knife catching. I just love catching knives. I've been practicing it for more than 20 years. I'm sitting here with my cup of Java, and it's morning, 6 a.m. in the morning here in the Ozarks, and we're going to talk about knife catching. And what I look for when I do knife catching opens up the doors for me. It gives me opportunity. It's like there's different ways to trade the market. You can trade them off earnings. But knife catching, I just love to do it. I look at patterns when I'm trying to catch knives. I look at history on the stock, looking for the patterns. I watch the tape. I look at the news. I want to see why is this occurring? Right now we're in a bear market. We've got Chairman Pow Pow running the show. Plus we got Brandon at the helm, and he's halfway there. So it created a very, very big bear market. We got geopolitical tensions in the market. That could cause a negativity in the market. We have a lot of new retail traders that are in the pyramid scheme that follow other traders that hardly know anything about charting. They're just going to follow the trend. So it's trend trading. Here's a great knife on Netflix. First thing I like to do is check out the news. I'll pull up the news and I'll see what's going on here. Is there any bad earnings, or did they file an offering, or just something that would be a headline, like departure of a CEO. Maybe FDA didn't approve a certain drug that people were hoping that would pass, that would create knives. And there's a lot more reasons to that. But news is always a thing to go to first thing. And that just headlines. Just read the headlines, and if you see something interesting, go a little bit deeper in it. But I always check the news first, and then I go to the history of the chart. I like to pull up the 20-day 1 hour and try to look for places of consolidation. Like to look for like a double bottom, or maybe here at a triple bottom. I like to look for patterns. Go back a little bit farther, go back to the year. We've been in a yearly Darvis box with a big gap down, so it's going to be hard to break that gap. We might be going sideways for a while. The stock could pull back all the way back to the bottom, or even to the midway to what I would call a pivot point, an equilibrium in that channel. Right now we're bullish in that channel because we're above that pivot point. Pivot point is a description that tells you if something's in support or if it's going to be breaking out of a resistance into a resistance. I like to even go back farther in my charts. Right now I've got a 3-year up here. I'll go back all the way to 20 years because I remember it was here 20 years ago when the Obama crash happened, and bring it up to the weekly time frame and look for some kind of pattern of some sort. Like, we had couple knife catches here, and it bounced up, a higher low, bounced up, created a nice little ascending triangle breakout to the upside. And that's what we're kind of setting up here. We're setting up into an ascending triangle breakout, maybe to the upside. Look for like another Darvis box right down in here. Maybe that can keep going in this bear market into this next Darvis box, which would be the top of that Darvis box would be a resistance level. Or maybe inside of here where we have a resistance, a double top break, and it pulled back to that double top break. I'd run a trend line across there. Maybe that would be a nice place to catch a knife. So I'm looking at chart patterns. I'm looking for consistency, looking for consolidation. And here we have another Darvis box. So we'll go back to that 20-day again. I'd set alerts. I'd set another alert down here at this double bottom. Just simply create alert at the mark at or above, boom, and that alert's set. So if it comes down there and hits that triple bottom, I might want to take this trade and run it all up. I'd look for like a 5-day pullback on a knife catch. We had 1, 2, 3, 4, 5 days of pullback, and then we hit the double bottom. Once it hit the double bottom, the next day it just boomed. So this is an opportunity. We can consolidate for 2 or 3 days until it kind of gets wore out. And as long as we hold a support level, like in this knife right here, for example, came back, hit that double bottom, and then boom, it broke out. Here's another consistent one right here. Let's go back 30 days on this chart. And see what 30 days tells us. That tells us a lot right here. We had a lot of consistency. Had a triple bottom, breakout, boom. We have a double bottom, breakout, boom. Double bottom, breakout, boom. So this thing can pop up a little bit, pull back to a double bottom in about 2 or 3 days, and then you'll have you a nice little run. Where to take it? Where would I take a knife like this? I'd go to like the previous high, draw a trend line, say I want to swing this stock to at least 242, maybe a little bit farther out it'd be 241, maybe 240. Or I want to take it to the pivot point in this channel. You got this little consistency right in here that you're looking for. I'll draw a trend line all the way across that. Try to find an equilibrium in there somewhere, right about in there. See, we had this double bottom right here. We had that little pullback right there. Maybe take this back to 234.45. I don't think it's going to break out huge. So I'm looking for consistency when knife catching. I'm looking for maybe 3 black crows, 3 big old engulfing candles, maybe 2 engulfing candles right at pre-market. You could look at the minute time. You could look at the minute time frame, and you were wanting to catch a knife first thing this morning. We had a double bottom right here. This is what I call a sneaky snake trading strategy that I day trade with. And when I'm catching knives pre-market and I want to take a bounce, so I draw me a little snake out. It's all about consistency. Take it to that first candle right there. Take it to the next breakout candle, which is right here. Once it starts to break out of that channel, I never tell anybody to chase. Maybe I might take it once it crossed the 9 crossed to 21, but this is a knife, pre-market knife, during open hours knife, and I could have took this at a double bottom right here. Broke out, came back to the double bottom, and then broke out of the channel, and would have maybe took that trade, especially once it crossed that 9, crossed to 21. But I'm seeing consolidation. I'm seeing a triple bottom, boom, 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 breakout, pulls back to a higher low. So we got the snake, breakout, pull back, boom, to a double top, exit the trade. So there's many ways of chart reading that you can catch knives. This is one strategy that I show every day, every morning, live on YouTube. You're welcome to hit that subscribe button, follow me, ring that bell for future updates, and you'll get these little promotional videos that I show these lessons on. So the bears are definitely in control. We'll just clean this thing up right here. We'll go back to that 20 day, 1 hour time frame. Someone asked me the other day, why don't you use the 30-day, 15-minute time frame? Well, I probably would, but in this strategy that I use, I have many strategies. Just not one. That's what makes you a good novice trader, is when you practice that theory. And in this case, when I'm doing the sneaky snake, I'm looking for double bottoms. I'm looking for a triple bottom or a double bottom low. Now, we could have another couple bad days, and we hit this double bottom on the 20-day off this alert at 218.13. I got it set just in case it triggers, and I know that we'll be hitting that that double bottom pretty soon on the 20-day 1 hour. It might give me a good opportunity to run it back up into this channel. So it's all about chart patterns and understanding them, going back, being in the now. In summary, many traders say just don't try to catch knives, but you got to wait. I mean, you got to wait until they start showing a pattern, till they start being consistent with a support level, and then you can really open up. But it gives you great opportunity. You could have great earnings, and all of a sudden the knife will catch after great earnings. Let's go back to NFLX here and see where the next earnings was. We'll put it up on the yearly. It was right in here. It looked to me like it reacted pretty good on them earnings, and that'd been a nice little swing. But again, you're down there at the bottom. You got the triple bottom right here. Earnings came out, boom. So you're looking for patterns. I love playing the triple bottom. I love playing the double bottom. We had a descending pattern right here with a triple bottom. Boom. Run it on up to the top of that channel. Now this has created a Darvis box. It pulled back to the pivot point, hit the top again. So we're running up with higher lows. This could be able to break out soon, maybe to that 200 SMA. And that's about midpoint of that gap. Gaps are always hard to break. So that's a little bit of lesson on catching knives. It's best for them to consolidate. Let them consolidate, go to the sideways. Maybe the bulls take over. Some good news comes out of pow pow and they want to slow down on the rate, easing for just a little bit, and then come back into it a little bit later. Who knows? It always takes a headline to move a stock. And plus we've got pow pow speaking. And, I want to give Time Direction 100% on his outlook on the Feds. They do have major control on the market, and I totally believe him. But I'm also a price action trader, and I think it creates great opportunity when the market reacts to such I was going to say nonsense, but it ain't nonsense. They're definitely in control. So I wish everybody a great day trading. Just be very cautious in these times. I think it's pretty bad. In the 20 years that I've been trading, they don't want, it's just not the best time. It's the best time for the bears to you can make a lot of money in these spreads. And I've done very well in the past year learning the sneaky snake trading strategy. And part of it is catching knives. I do it every morning when I'm trading stocks and I want to buy the dip on the indices, or, the SPY, the SPX, the QQQ, and the IWM. And also I trade the SQQQ. If the bears are in control, I like to run that thing up. If they're not in control, I like to run it down. Retail traders, catching knives. Have a great day.